Let's talk about super microcomputer ticker symbol SMCI. This stock was the toast of Wall Street, the undisputed king of the AI hardware revolution. Earlier this year, you couldn't touch it. The stock was on a rocket ship to the moon, fueled by endless optimism for artificial intelligence and its insatiable demand for high-powered servers. Investors who got in early were printing money, and everyone else was chasing the rally, desperate not to miss out. The narrative was simple. AI is the future, and SMCI builds the powerful engines that make that future possible. It was a beautiful story, a growth story for the ages, and the stock price reflected that fairy tale. But folks, the music has stopped. That rocket ship has hit some serious turbulence, and it's coming back down to earth fast. In just the past month, we've seen the stock get absolutely hammered, dropping nearly 30%. That's a brutal, gut-wrenching decline that has left a lot of homework doers scratching their heads and a lot of speculators in the hurt locker. The momentum has completely reversed. The buyers have vanished and the sellers are out in full force. The question on everyone's mind is what went wrong? How did one of the market's biggest winners suddenly turn into a massive loser? This isn't just a minor dip, it's a full-blown crash that has shaken investor confidence to its core. The pain really kicked into high gear in August and has bled right into September. We saw the stock fall over 5% on the last Friday of August alone, a clear sign that the bears are in control. This isn't just profit taking, people, this is fear. The stock sliced through support levels like a hot knife through butter. Remember that massive rally that still leaves the stock up about 44% for the year? That's cold comfort for anyone who bought near the top. The game has changed and the easy money has been made. Now we're in the trenches trying to figure out if this is a temporary setback or a permanent impairment to the company's story. So, what's the deal? Is this the buying opportunity of a lifetime, or is it a classic value trap designed to lure you in before the next leg down? We've seen this movie before. A high-flying growth stock that seems unstoppable suddenly hits a wall. We need to roll up our sleeves, do the homework, and look past the hype. Stick with me because we're about to find out. Alright, let's get down to brass tacks. The number one reason for this catastrophic drop is that the company's growth story is hitting a major speed bump. Management has been forced to slash its revenue guidance not once but twice. They started the year telling us to expect blistering 87% revenue growth. That number got investors fired up, sending the stock into the stratosphere. But now they've walked that back all the way to just 49% growth for the year. Well, that's a massive cut. And it tells you that the demand they were expecting simply isn't materializing as quickly as they promised. Wall Street hates nothing more than a broken promise, and SMCI has delivered a big one. On top of the slowing sales, the company is getting squeezed on profitability. Gross margins have plummeted from a healthy 17% a year ago to a measly 9.5% in the last quarter. Why? Management says this because they had to cut prices aggressively to win new business and stay competitive. Lower prices. At the same time, they're dealing with higher costs as they transition to NVIDIA's next generation Blackwell platform. Higher costs. So you have a toxic cocktail of lower prices and higher costs. That's a recipe for disaster, and it's crushing their bottom line. Earnings per share actually fell year over year. Now for the real bombshell, the thing that sends shivers down my spine. In a recent SEC filing, the company admitted to having material weaknesses in its internal financial reporting controls. Read that again. Material weaknesses. That's auditor speak for we can't trust the numbers. This is a 5-alarm fire. It raises serious questions about accounting irregularities and the credibility of management. So you add it all up, slowing growth, shrinking margins, and a management team that admits its financial books are a mess. Is it any wonder the stock is getting obliterated? The market is reassessing its entire thesis on SMCI. Where does Wall Street stand on this train wreck? It's a house divided, a classic battle between the bulls who see a bargain and the bears who see a falling knife. On one hand, you have the optimists. The average price target from the 16 analysts who cover the stock is around $46.81, which suggests a little bit of upside. They see the AI story as a long-term trend bigger than a bad quarter or two. They're pointing to accumulated volume around the $40 level and calling it a potential floor, support where buyers step in. They say the sell-off is an overreaction. SMCI remains a key AI infrastructure player. The transition to NVIDIA's Blackwell platform, while costly now, will spark demand later. Margin pressure is temporary, they argue, and new design wins should restore profitability. Some call this a golden buying opportunity, but the bears are roaring. Another analyst group has a whole consensus with a $37.17 target, implying more than 30% downside. They sound the alarm. Danger! Slashed guidance and collapsing margins show a fading edge. They worry giants like Dell and HP are closing in, forcing a price war. Risk is too high even at these low prices. Bears hone in on governance issues. Material weaknesses in financial controls are a deal breaker. Until accounting and trust are fixed, the stock is uninvestable. They say they expect continued volatility and ammo for short sellers. The bears see a company that flew too close to the sun on AI hype, now with melting wax wings. Catching this falling knife could hurt. The you to stay on the sidelines until the smoke clears. If SMCI wants to get its mojo back, it has a mountain to climb. This isn't just about the stock price, it's about rebuilding the entire foundation of investor trust. First and foremost, management needs to stop the bleeding on guidance. They absolutely cannot afford to cut their revenue forecast again. They need to deliver a quarter where they meet expectations. Dare I say, beat expectations. They have to prove to Wall Street that they have a handle on their business and can accurately predict demand. The next earnings report will be the most important in the company's history. They need to come out and deliver a solid beat and a confident raise. Anything less will be seen as another failure. Next, they have to fix the margin problem. Showing revenue growth is great, but if you're not making any money, who cares? The company must demonstrate a clear path back to healthier gross margins. Prove the price cuts were temporary to win market share, not a permanent new reality of doing business. Show that the costs associated with the Blackwell transition are under control and that they can sell these new, more powerful systems at a premium. Investors want to see profitability, not just empty sales figures. They need to see earnings per share start climbing again, and fast. The single most critical task is to clean up the mess with the financial controls. That material weakness disclosure is an anchor dragging this stock to the bottom of the ocean. Management needs to be transparent and aggressive in addressing these issues. Hire outside auditors, overhaul internal processes, communicate every step they're taking to fix the problem. Guarantee to investors that the numbers they report are accurate and reliable. Until that cloud of doubt is removed, a huge portion of institutional money won't touch this stock. Credibility is everything on Wall Street, and right now SMCI has none. Finally, the top brass, including CEO Charles Liang, needs to get out there and restore confidence. Be front and center. Communicate a clear and convincing strategy for the future. Explain how they will navigate the competitive landscape. Explain why SMCI will remain a leader in the AI space. No more hiding behind press releases. Be on conference calls, be at investor days, be in interviews, taking tough questions and providing straight answers. My final verdict is this: keep SMCI on your watch list, but keep your money in your wallet. This is a broken stock facing serious operational and governance crises. A true buying opportunity will only emerge when the company demonstrates meaningful progress fixing core problems. A clean bill of health on financial controls, 1 or 2 quarters of solid, profitable growth. Until then, any bounce is likely to detachmas. Kaiguanti yate si yati zakimasta ki kati ma ki kaste wope ants sees. Is this the potential reward is not worth the catastrophic risk? Don't be a hero. There are better, safer places to put your hard-earned money to work. Booyah!